Switching focus back to markets. Markets have given up the gains that we've seen. We reclaimed the mark of 10,500, but Nifty right now is trading just with gains of 18 points. And we're going to highlight Bank Nifty is the one which has turned weak once again. That's trading with cuts of nearly 36 points as we speak. Well, let me also introduce Himen Kapadia, who's right here with us in the studio. Hi, Himen. Thanks a lot for joining us. First, a call on Nifty and Bank Nifty. I know you've been pretty skeptical in the last few, conversations we've had, and you've been more of stock specific. Would you still maintain that stance?
Good afternoon to you. Navneet, I thought 10,490, 10,550 was what I was looking at. We went to 10,520 today as far as the Nifty spot is concerned. I think in the near term, things are looking a bit heavy. Technically, academically, is it going to 10,550? I don't know. I have a feeling it has headroom to cover the gap at 10.7, but before that I'm seeing a hiccup of 80 to 150 points Nifty fall. What we're seeing today is we've seen negative divergence on the early charts by some of the indicators, though markets have made a new high, and in the Bank Nifty it's even more pronounced. So I have a feeling we'll see a bounce coming in this next 15 minutes. If we don't make a new high by Monday morning, I don't think we will. If we don't and we break 10,450, I think we're going to lose at least 70-80 points as far as the Nifty is concerned. So individually, stocks will do what they have to. Near term, I think the markets are slightly ripe for a correction. The bigger picture, 11 to 9950, the bounce is not yet over. But this one leg of the bounce is making heavy weather. Open interest has gone to 2.6. We started at 1.92. So much of open interest addition at this level, I don't know. It's iffy. So I wouldn't short, but actually I would buy a put, but I'd wait for a fall. I think so. It's around the corner.
Okay, and it's good to have a contra opinion. Manav, you're looking to buy Nifty, Bank Nifty,
yes, absolutely. In fact, we maintain a bullish view in the markets. Last week how Nifty retraced from its lows and regained its weekly support of 10,100. And moreover, from there, it has seen a sustained rally. That is what I had mentioned last time. We can expect a sustained move without any brief correction towards 10,600. Moreover, what happened was, there was too many short traps that has taken into place. And I believe if we see at the chart also a couple of days back, there were multiple patterns which indicated for some shorting position which indicated. So I think as long as we sustain and hold above the levels of 10,350, we can expect this move to go to the levels of 10,600. Even for Bank Nifty, 24,800 is an important support levels, and looking at the weekly perspective, things still looks fine. The immediate resistance will be at 25,400. So once if we exceed that, I think 25,600, 25,700 is a possibility.
Okay, let's talk about specific stocks. I mean, you seem to be more comfortable taking stock-specific positions currently. What are the ideas that you have for our viewers today?
I think I like Bajaj Auto because it's been battered down badly. Having said that, we've spent almost 4 weeks not breaking its lows of around 2740. Deeply oversold. Volumes are improving. Indicators are turning positive. So I have a buy on Bajaj Auto at around 2780, stop loss 2740, target 2860. And the other stock is Tata Motors. I have a feeling that Tata Motors has formed a flag over here. We're going to give a breakout around 365, so we are at around 357. I have a feeling there could be a maybe a 35 point bounce from here. 25 point bounce around 285 in Tata Motors.
All auto, it seems to be an auto day somehow. Just been auto stocks all across. Manav, aside of the auto names, for the short term, are there any trades that you have?
Yes, my first buy call is on Shriram Transport Finance. The stock has been a very good leader so far.
Auto connected, but okay.
But the stock has been in a very good up momentum. The momentum is very good. And at 10,500 index, it's time that you also be with some stocks which are showing some sort of a good relative outperformance irrespective. Because the margin of safety remains quite high. So, the momentum indicators are still in the buy mode. We recommend a buy into this with a stop loss of 1540 for an upside target of 1680. The other is from the IT packs, it's Tech Mahindra. This stock after a good 3 to 4 weeks of consolidation has seen a good breakout on the weekly charts, and the volumes are also confirming the same. So I sense that there is a strong support for this stock at the levels of 650, 655. Post a recommendation, the stock has actually moved ahead, but a stop loss of 645 can be maintained for an immediate target of 690, and a positional target of 720 is possible.
Interesting. Okay, so those are some names to watch out for. Let's welcome our fundamental expert on the show as well, Anand Tandon, market expert, joining us. Anand, good having you. Thanks so much for joining in. This up move would have surprised a lot of people. My question to you only is that, has it surprised you? Because rightly so, you were bearish for most part. It went down to 98,900, 9800. From there, the move has been fairly strong. How would you describe what's happened over the last 7-8 days? And what's your stance now? Has it changed?
Well, from what I hear from the technical analysts, they all seem to think that 10,600 is where it can go to. And since the market seems to be following technicals, you ride along with that. But the reality is that I think the drift, to my mind, during the course of this year will remain on the negative. And therefore, you have to kind of assume that you will have to trade along the way, because it's unlikely that you will get any strong move one way or the other in a very short time frame. But the moves are enough to be, they are tradable moves, right? So if you get a 300-400 points move one way or the other, you could certainly trade along with it. The bottom line is that the earnings will determine the growth from here on. And the earnings are still looking like they are perhaps overstated. The expectations are still running ahead of reality.
Well, so what do you expect? Okay, let's start off with. Okay, we'll talk about Infosys in a bit, Anand. Let's start off with what's arguably the pocket of the day, and it has to be autos, and not just necessarily because the technical discussions veered around them, but for various reasons. Ashok Leyland getting a defense order, that's shooting up. Escorts continuing to trailblaze, touching new highs. TVS Motors, for example, has had a good move as well. Last week we had Tata Motors being amongst the best performing stocks too. What's the sentiment and what's the fundamental looking like out here? Two-wheelers, four-wheelers, tractors, what have you?
So, this is certainly one of the sectors where a lot of hopes are pinned in terms of earnings growth. And not only for the current quarter, but also for the next 12 months. So the expectation is this will be one of the largest contributors to the earnings growth for the next year as well. And therefore, it's not surprising that in a market which is short of ideas and short of growth, anything which is growing will attract a lot of attention. However, that said, none of these stocks are particularly cheap. I mean, Tata Motors may look optically cheap in the sense that, it is trading at less than 4 times EV to EBITDA FY20 projected earnings. But there is also a big issue in terms of, the assumptions being made on what's going to happen in China and US. Both of the markets are looking a bit choppy, to say the least. So, the estimates could go one way or the other. On the domestic side, if you take Maruti, for example, it's probably trading at the highest valuation it has ever reached. So there is no great valuation comfort, but because of the fact that the earnings will come through, you want to be in it if you are building a portfolio. Tractors clearly would be an outstanding performer. I think the numbers are justifying that kind of growth. So therefore, I'm not surprised to see the tractor companies do well. I think the CVs and HCVs probably have a longer runway because of the fact that the number of roads that are coming up will obviously will result in an increase in the truck availability as well. And therefore, you should expect to see a continuous demand coming there. I'm not so sanguine on what is happening on the two-wheeler space. I think the competition is fairly high. And the passenger vehicle, obviously, there aren't that many players. Tata Motors seems to be getting its act together, but it's still a very small part of their portfolio overall, at least in India. There are bigger players overseas.
Okay, that's the view coming in on the auto pack. Just want to highlight few stock. Pull up Tasty Bite Eatables. It's not a very liquid counter, but it has gone up quite substantially in the last last 1 hour of trade or something. It's trading with gains of 10%. But if you look at the traded volume in terms of shares, it's only 12,000. But still, compared to yesterday, definitely the volumes have been on the higher side. The other one which has gone up on extremely high volumes today is Rupa and Company. And I've been observing this stock has been sustaining the gains that we've seen throughout the session today. It's still sitting with gains of almost a 10% in trade. Quickly, Manav, any thoughts on Rupa on the charts?
Actually, the stock has been a corrective decline from the highs of 590, and recently the stock has also tested its key support levels and have bounced from the support zone. So most importantly, we would like to see some sort of a sustained move above the levels of 468. Then when you would want to get in, the volume definitely indicates some sort of a momentum coming into the stock. But as long as the stock does not sustain above 460.65 on closing basis, I don't recommend getting into long, because the risk reward ratio also does not favor. And what I would just just update, the stock has an important support at the levels of 420. So the stock is in a gray area mainly for the risk-reward ratio, and we'll have to wait for some further breakout to happen into this.
Okay, that's the view on Rupa and Company. It's trading with gains of 10%. Anand, wanted your thoughts on fertilizer pack, because since morning, all these fertilizer companies have been buzzing, from the likes of Chambal Fertilizer, that's seen gains of 10%. We've seen FACT also registering good gains in today's session. RCF2, in fact, Chambal has touched its fresh 52-week high today. Any thoughts here?
Well, as I said, the farm input sector is obviously something that most people are looking at, for the simple reason that one of the great the triggers for this year's run is probably going to be government spend on the agri space. And how do you play that other than to look at things that are going into the farm? So whether it is the farm input or FMCG, which can be sold in the rural areas, that is the place where most stocks are getting attracted. Per se, fertilizers, I think, has benefited because of the change in the subsidy rules recently. The DBT, I think, is still a question mark in terms of how that will impact companies, because in my view, it will actually increase the working capital cycle of most companies. So companies which are well capitalized and have cash on their books will likely gain market share. And those which are a little more stretched will have to lose market share as we transit to DBT. So there is a sectoral play that may happen within that as well.
Anand, from fertilizers to technology, do you expect Infosys to really give us a sense of how the quarter could be for the space at large, or has Infosys long ceded that position to some other companies? And by and large, what do you expect Infi to do?
So I don't think Infosys is the bellwether that it once was. That doesn't mean that you cannot get an indication on the industry from Infosys. Clearly, they remain one of the leading service providers, and what they have to say will be looked at with serious, with serious interest by the analyst community. Frankly, I don't think anybody is putting too much of store in terms of saying that you will get double-digit growth for at least the frontline companies. But we do expect to hear that about what the outlook for the order book, etc., looks like, especially in the US, since there is a greater chance that this year may be better than most, because the kind of GDP growth that we are likely to see in some of these markets may actually restart spend in terms of the discretionary spend, and especially for the more traditional businesses. So you could find that the service businesses are doing well. Essentially, you're looking for the growth numbers and a guidance in terms of which sectors are going to do better. And so long as they don't have any negative surprises, I don't think that you'll see any significant downside in the stock.
Okay, and of course you can catch the entire management of Infosys at 4 p.m. today, or maybe slightly before that as well. CEO Salil Parekh, CEO Praveen Rao, the CFO D. Ranganath, and Human Resources Chief Krishnamurthy Shankar would be addressing the media, and you can hear that live here on Bloomberg Quint. Anand, take a moment to thank you for joining us today and giving us your thoughts. Let's wait and watch what happens. It'll be interesting to see what the markets do before we talk next. So looking forward to that as well.
Thank you.
That's Anand Tandon with his thoughts. Okay, now let's, before we move any further, actually we do have a management, but just before that, Heyman, if I can ask you to check out the charts of Infosys and tell us if you would take a trade before the numbers. Do the charts look so strong that you'd be comfortable taking a trade ahead of the numbers?
I would have taken a trade yesterday.
You would have?
Yeah.
Okay, what do you do now since you didn't?
No, I'd stay away.
If you had an existing trade, would you book money out?
Yeah, I think I wouldn't try to second guess the results. I have a feeling...
so that's not a chart call, that's just a prudent call?
Yeah, that's being safe, and I'm not sure if one can... normally I would prefer to sell options, but since it's an event risk, I won't sell any strangles because it could move either ways. And we have moved from 1105 to 1185 in the last 4 trading sessions. So things are looking okay. I don't think so. IT as a sector will do well. Infosys is going to 1280 in the next 6 months. I can stick my neck out and tell you that. As of now, I would stay away.
Okay, let's now put focus on Gravita India. This company started commercial production of PPCP granules at its plant in Chittoor in Andhra Pradesh. While this news came out 3 or 4 days back, the stock has been on a roll the last few days, and therefore let's get a buzzing stock. Joining us to talk about the impact of this same and how would the quarters ahead look like is Sunil Kansal. He's the CFO of Gravita India. Sunil, good having you. Thanks so much for joining in. Tell us, what would this capacity addition to the plant do? I believe the commercial production of PPCP granules has already started, if I'm not wrong, at the new plant.
Yeah, good afternoon. So this plastic recycling, which we are starting now in Chittoor, Andhra Pradesh, so which was a strategic move for our expansion of plastic recycling business in various locations. So this was part of our initiative. The total capacity we are going to increase is 6,000 tons per annum, and we have just started 1,200 tons out of this 6,000 tons. And so this is the scrap which is already part of the PP, which we are recycling as a battery recycling we are doing. So this is a part of that polypropylene, and we are making the granules out of that, and granules will be supplied to some plastic molding industry. And we are going to increase furthermore 4,800 metric ton in next 2 months.
Okay. So you're going to take your capacity utilization to the fullest in the next 2 odd months, which means that Q2 onwards, you will be able to utilize this entire capacity of 6,000 MTPA.
Yes. So we are using our own PP, and we are also going to use some HDP and LDP plastic scrap, and we are going to utilize this entire capacity for this.
Sunil, the margins from the plastic business, I believe, are better than the other segments of lead and aluminium. If you could tell us, how will this increased capacity contribute to the EBITDA margins in FY19? Because I believe in Q3, we did see the margin contraction coming about.
Yeah, because after the lead and aluminium, we are going to expand now the plastic business, which is the better margin business, and we are going to see some upward trend on the overall margins of the group. So we are expecting from a move from around 9 to 10% to around 11 to 12%. So 1.5% margins should be upgraded after adding this capacity of the plastic recycling.
In FY19, Sunil, can we expect that for the full year?
So we can expect around 10 to 11% margin for the overall business.
And if you could tell us, what's the margin that actually you're targeting from only the plastic business?
So plastic business is going to be around 12 to 13% margin, which we are going to add. So other than this PPCP, we are already doing PET recycling in Nicaragua and Jamaica in Latin America. So and the overall capacity for this, including this 1,200 tons, is increased to 21,000 tons now. And we are further expanding it over a period of time. So,
well, if all seems to be hunky-dory, what's the quantum of top-line growth that you envisage you can get in FY19 or FY18? Is there a ballpark estimate? So,
we are already taking, last 2 years, we are taking around 50 to 60% growth in the top line and the bottom line also. So this growth of 50 to 60% in top line and bottom line will continue in FY19 also, including this plastic business.
So can we expect revenues of somewhere between 14 to 1,500 crore in FY19?
Yes, again, the similar growth will continue, like 50 to 60% growth, yes.
Okay, because so far in the 9-month numbers, Sunil, have been looking pretty good. You've already done what you did for the full year last year, 655 crore in terms of top line. Do you see the year ending with 4-digit revenues?
Yeah, we'll be more than this 4-digit revenue.
Okay, so looking to cross almost 1,000 crore for the 9 months. And could you tell us how are you looking to fund your capex plan that you've just spoken about, your plastic plant?
So this plastic line, we have just expanded approximately 28 crores for this 1,200 tons capacity. But we are going to expand more for additional capacity of 4,800 tons. That is approximately 75 lakhs. And but we are also expanding in lead business in different geographies. So the total capex plan for this year, FY19, is approximately 50 to 60 crores.
Okay, Sunil, we'll leave it at that note. Thanks a lot for joining us and taking us through that update on expanding the capacity for the plastic business of the company, which contributes more to their revenues. And as he highlighted, they are expecting, again, 50% top-line growth in FY19, and they do expect to cross the 1,000 crore mark in terms of overall revenues for FY18. Remember, so far they've done nearly 650 crore for FY18. Well, before we head into a break, hear out Andrew Holland of Avendus Capital, who talks about rising inflation, mid-cap IT, and more.
Bad news in all of this is that commodity prices, including oil, have spiked higher, and that's really not good for India and inflation. So whilst the figures we saw, yesterday in terms of the CPI, the underlying, message is that the core CPI is actually still rising, and that's a concern for me. And I think, if I think of a higher oil price going forward, then that's going to put constraints on the government in terms of deficit. The borrowings will have to rise, and yields are probably heading higher, and the rupee's probably going to depreciate from here. So that's the kind of scenario which we're looking at the moment, which is not so good from a macro viewpoint. All markets globally, including India, are looking still a bit tired, and I think we're in this kind of trading range in the very short term. So we've seen the upside the first part of this month after kind of two steep falls in February and March. So again, it should make us feel a little bit happier, but we're probably kind of done in the very short term. Mid-cap IT has been an area which has done very well, and I think will continue to do very well. So I think that's probably where a lot of investors will continue to focus. Whilst we'll get reasonable results from the big players in IT, I still think we're a few quarters away from them kind of resuming strong growth. So it's going to be the mid-cap plays which probably have the better upside in the very short term. Those who are focused, purely on the kind of a few brands within their segments are doing exceptionally well, rather than those which are just introducing newer products which kind of confuse the consumer. So that's what's really happening within the two-wheeler. And of course, CVs look as though the cycle's continuing there. So the whole sector, I think, is still looking good, but obviously you have to be very selective. And on the auto parts, it is unfortunately kind of still quite a lot of mid caps there, but for some of the larger caps, you're benefiting from both growth in India and growth offshore as well, in terms of the US and Europe. So like a few of the names there as well. My worry is obviously if oil prices go towards 80, this is not good news for India. And I think the other thing I just want to add in terms of what could be add to volatility going forward is if you went through the Fed minutes, which were released earlier this week, then the new Fed Chairman Powell is really saying that all of the people, all of the Fed representatives are saying that they expect growth to pick up strongly in the US, and therefore the rate increases might be more than just the three that's been indicated. Now, that I think the markets have not really kind of taken into account.
I would countdown right here on Bloomberg Quint. This is what the rest of the world is up to. Well, not too much really, except for DAX, which is up about 0.5%. I would presume that the Dow futures too would be trading not with too much of a negative. It might be flattish, the Dow futures as well. So no big moves out there, but You're trading okay. So the rest of the world is not a sad place, which is a good thing. Before we get to the Fab Four though, Hemin Kapadia tells me that there is a stock which is just breaking out and it's important for a trader to take note of it. Hemin, what is the stock?
Yeah, TVS Motors volume is, we still have 20 minutes left. Volume is highest in the last 45 trading sessions on NSE. We have to look at the delivery marking. A 4.5 month supply line will, if it closes at this level today, will have overcome the 55-day exponential moving average. Indicators have turned positive. Looks good.
So buy at the current levels?
Yeah.
Wow, it's turning out to be an auto day. Let's figure if Yash Upadhyay has some auto stocks in his list of the Fab 4 stocks that he's drawn up. Yash, good afternoon. Autos?
No, actually today is defense the theme for my Fab 4. So we kick things off first of all with Genus Power. This one had gained as much as 4% after Kotak Securities maintained its buy rating on the stock and have set a target price of 79 rupees, indicating a return potential in excess of 50% from the current levels. The management seems quite positive on the demand outlook for meters, and on the back of their recent order wins, their order book has more than doubled from FY17 at about 650 crores to over 1,200 crore rupees. They also expect the company's earnings to grow at a compounded annual growth rate of 24% over FY18 to FY20. As I was saying, Premier Explosives had gained close to 7% today after the company said that it has partnered with French defense firm Nexter for the manufacturing of bimodular charge systems in India. And Ashok Leyland too is up about 3% after receiving a big order worth 100 crore rupees from the Ministry of Defense for the supply of its high mobility rocket carrying vehicles. And finally, we're also looking at Rupa Company. This one had gained as much as 14% today. Its highest intraday move since September of 2017. Volumes too coming in significantly higher at over 40 times the 20-day average. Back to you.
All right, Yash, thanks a lot for bringing those Fab 4 stocks of the day. Can we just pull up a Glenmark that's gone up nearly 4% in trade, and it's featuring among one of the top gainers as well in the F&O securities. 4.3% higher. Manav, any trade at 582?
Yeah, the current levels, what we see is, the stock has been bouncing from its oversold levels, and importantly, it has breached its important weekly resistance of 565, 570. And looking at the volumes, it also confirms a short-term trend reversal. So I think in the near-term perspective, the stock could see a short-term retracement rally towards the levels of 600, 610. On the immediate basis, I recommend a stop loss of 516 to this.
Okay, 600 or 610 can be the next target on Glenmark Pharma. This is what Manav is indicating. But let's move on. It's not been the best of start to 2018, with the Indian benchmark indices down nearly 1% in trade this year. But Soumit Sarkar's pulls out 4 stocks with a market cap of more than 10,000 crore that are correction proof. Why? Because they have not only withstood this market correction, but the earlier one as well. Let's go across to him and find out. Soumit.
So first, let's see how the Indian benchmark as in Nifty 50 has performed in the last 2 years. So if you see in this chart, there are 2 correction phases and 2 phases of rally. So from 25th Feb to 8th September, the markets gained by more than 28%. Post that, they declined by close to 12% till 26th December. Post that, we again saw a rally of close to 41%, which lasted till Jan 29th when the markets touched their all-time high. And since then, we saw a decline of close to 9% till 4th April. So if you see, we have selected stocks that have market capitalization of more than 10,000 crore, have gained more than 28% in this time period. Then they again managed to gain more than 12% in the second, when the markets were declining, they managed to fall less than 12%. Then they again managed to gain more than 41%, and then again managed to fall less than 9%. So we get only 4 stocks: HDFC Bank, Maruti Suzuki, Bajaj Holdings, and Petronet LNG. Now these stocks have not only managed to outperform the markets when they were gaining, but were also relatively less hurt when they were declining. So when the markets gained more than 41%, these stocks gain in the range of 45 to 86%, and when markets were declined close to 9%, these stocks declined in the range of 6 to 8%.
Wow. So, well, Soumit, I think, has taken 2 previous cycles, or actually 4 cycles, right? One rising, one falling, and then one again a rise and a fall. And during these 4 cycles, these 4 stocks have outperformed the benchmarks in a meaningful way.
Yes, exactly. So when the market gained close to 28%, these stocks gained more than 28%. When they declined by 12%, these stocks fell less than 12%. Then again, when the markets gained by 41%, this stock gained more than 41%. And when they declined close to 9%, these stocks fell less than 9%.
Wow, Sumit, thanks so much. The top two names don't surprise me really, but Bajaj Holdings and Petronet LNG, some fairly interesting names out there, outperforming the last 4 moves on the indices. Sumit, thanks for putting that into perspective. Let's pose that question to Amit Jeswani, founder of Stallion Asset Management. He joins us right now on the show. The last that I remember speaking to Amit, he was not bullish. He believed that valuations are out of whack and people should be careful when they put in money. He had sitting on a lot of cash. Now, Amit, has this move surprised you? And when the markets dipped to 9900, did you put in money or did you not get a chance?
No, so we're now on 9% cash. So we got lucky and did put in some money, Neeraj. See, we still think that the small cap and the mid cap will take about more than a year at least to hit new highs again. So that trades remain. See, the quality of stocks that are moving higher are market leaders, right? People should concentrate on market leaders right now and be in very high quality market leaders, the guys who are generating free cash flow, because that's where the big alpha would be. If you look at what the screen is saying, the screen normally says a lot of things. So in a retail, D-Mart's hitting new highs, Titan's hitting new highs in the jewelry space, where other jewelry counters are down anywhere between 40-50%. On the steel sector, which is a very cyclical sector, the leader JSW Steel is 2-3% away from lifetime highs, whereas the entire basket is 20-30% away from lifetime highs. So you can take any sector, Jubilant Foodworks. So basically the leaders of every sector are that's where the money is getting parked. So the next 2 years we are gonna it's a bowler's wicket, and you don't try to be Sehwag on a bowler's wicket. It's better to be either Dravid or Virat Kohli. We choose to be Virat, but yes, that's how we're gonna play. We're gonna be defensive, and it's okay to make 25-30% a year, and that's the kind of returns we think that quality compounders can do the next 2 years.
I mean, did you get to buy Jubilant Foodwork and Titan?
So we didn't buy Jubilant Foodwork and Titan because these are not stocks growing at 25-30%. So a criteria. Okay. So we are not buying stocks. We are buying a strategy that we follow, and in our strategy we only buy companies that are young, entrepreneur driven, and companies that can grow from, we won't buy an HUL. HUL has grown sales in the last 4 years from 25,000 crores to 34,000 crores. We would buy, let's say, a Winnie product which has grown sales many times. So basically we buy young companies and companies which are taking on market share from the leaders or the leaders. Any company which is taking on market share while generating some free cash flows, that's where we look at.
You share some names of these young companies that you've been buying?
So our core portfolio is largely on the infrastructure side. That's one place that we've been bullish on, not from today, but for more than a year right now. See, the thing is that there is no competition. Like in infrastructure, there's a large opportunity size, there's a huge tailwind, but there is no competition. Now, I went out and saw every project, EPC project or bought that time, project that was bid between 2007 and 2011. The number of bidders in every project was between 26 to 37, right? So that were the number of bidders. Right now in the HAM projects, the number of bidders are 4 to 5 maximum, and L3 and L4 are just out of race. So it's just like 2-3 serious bidders in one project. So you can make a lot of money. See, competition kills profit. Until the time there is no competition, we will keep holding on to that bet. The other bet that we have in our portfolio is the NBFC space. That's something that everyone knows, and we've been long for a very long time. Those are the kind of bets that we are looking at. The new additions that we have done, that's done on the real estate side, and that's where we believe there's a very large trend that is possible, a very large trend which can make a lot of money for good investors.
Amit, I'm going to push that a little bit forward. By the way, just before I get back to that conversation, need to mark 2 or 3 names out here. Indiabulls Ventures has this big move today, 15% higher. Rupa and Company about 12% higher. There is strength. Navneet was talking about the fertilizer names. Chambal, RCF, Deepak Fertilizers, some big moves that have happened here. And look at TVS Motors and Escorts. They are sitting pretty today. trading at the day's highs. In Escort's case, trading at life highs for itself. So a clutch of names doing really, really well for themselves. Good going there. Amit, just scratching that surface of real estate. You're going for asset owners, you're going for executors like Godrej Properties, which is just kind of turned the business model upside down, so to say, and now others are following suit. What is it, or where is it that you're finding favor? Because one thing that these companies are not doing is generate cash flows.
See, I'll tell you, this model is a little different. So there's a change which is happening. The first thing is disruption creates trends. So we look at disruptions because that's a big change which is happening. Am I bullish on real estate as a whole, as a sector? Absolutely not. So I am very confident that 80-90% builders will never ever build a project again. Like in Bombay alone, there are 700